Well, hello. We're going to answer a very simple question. What is trading? And a warm welcome to one and all. And for those of you who have not seen me before, my name is Langers, and I am the coffee-obsessed Scruffy Trader. That's right, we all know Scruffy likes a coffee. Should really have that on a t-shirt. But anyway, what are we talking about today? Well, believe it or not, the channel next month is coming up 2 years. And I've been having a few discussions recently. And it's all about going back to basics. So that's what we're going to do. We're going to do a series of videos where we're going to answer a single question each time, so the videos will be quite punchy. And the idea is to build up a reference point that you can just look at if you're stuck. So, what's an RSI? What's a moving average? What's an Arun? All these sort of strange things. How do you read a candlestick? Any question you like, drop it in the comments below and I'll try my best to make a video around it. And the idea is, once it's been done, you'll have reference points to build up a strategy. And towards sort of the middle part of this series, I'll show you how to build a strategy once you've got a few indicators under your belt and you know how to combine them. Because that's the thing with trading. There's no one fits all, and nobody trades the same. We all look at markets in a different way, and that's what moves the markets. And as you can see behind me, you'll see the different screens, and I'm talking to the guys on the Discord here. For all they follow a lot of what I do, they still have their own little bit of flavour to it, because they still see things their own way. And that's the beauty of trading, and that's why it fascinates me, because it is so diverse. So what I'm going to do is I'm going to enjoy my coffee, and I'll jump up on the whiteboard and I'll try and answer the question in plain English.
Well, we're waiting.
Okay guys, so this is going to be a very quick video, assuming you've never come across trading in your life. And you'll be surprised how many people do email me and ask me what a swing trader is or what a position trader is. Because they just genuinely don't know, but they're curious. And the easiest way to answer it is in a video like this. Now, trading is exactly what it says it is. It is a trade. You're making an assumption or an idea that an instrument is either going to move up in value or down in value from its current price, and you're going to profit from that movement. Now, there are many disciplines. There is disciplines, I'll get onto that in a minute, but there's many different types of trading. You have share trading, commodity trading even as well. And here's the best commodity going, my coffee, supplied by the one thing that I'm not going to trade in, Winky. Thank you, my love. You need your coffee. But you could trade coffee. You genuinely can. You know, you can trade pork bellies, orange juice. But they are commodities. You can trade metals, copper, gold, silver. You can trade natural assets, as in natural gas, emissions. You can trade indices, which is kind of the economy of a country. So you'll have the German 30, better known as the DAX. You can have the French 40, known as the CAC. The UK 100, known as the FTSE. The S&P 500, which is the USA. The Dow Jones. There's loads of them. And if you try and trade all of them, you find yourself pretty swamped. And then there's the big daddy of them all, Forex. And Forex is probably what you see the most, and that is trading currency. And the idea is you'll have two currencies pitted against each other, one will rise, one will fall based on the exchange rate, and you make money on that one's movement. So that's what trading is in a nutshell. Okay, and I touched on disciplines. Well, I believe there are 4. You know, some might disagree, but it's just kind of the way I look at it. The one you'll see the most, and it's normally shown by the likes of this,
You ding dong!
is scalping, and it's shown as quick money, you know, road to riches. It's very difficult. So if you're going to scalp the market, you're on a very low time frame. Normally 15 min to 5-minute charts, possibly below. Okay, I find that hard work. I do use 15-minute and 5-minute charts for entry only. But the next part is where you find my trading discipline, which is day trading. Now, a day trader will use a 1 hour and a 4 hour chart. Why? Because it can take all day for the trade to play out, and you're looking to execute your trade within a single 24-hour period. So you might open your trade at 9 o'clock and you finished at 11 o'clock the same day. All right, and you're using 1 hour and 4 hour charts. All right, then you have a swing trader. Now, a swing trader may use a 4 hour chart, but he'll also use a daily chart as well. So it's a very long time frame, and you maybe look at the charts once a day. It's ideal if you're working around a day job, because you can check the charts end of the night, make your decision, put your orders into market, and then just go away about your business, pick it up the next day. Very, very simple. And then you've got the last one, which is a position trader. And they will look at a day or even a weekly chart, possibly even a monthly chart. And these are long-term investment style trades. In other words, where swing trade may last a few days to maybe a couple of weeks, a position trader operates on a similar basis, but the trade might last for months. And that's the idea. You position yourself in the market, maybe it's in February because the conditions are correct, and you hold your trade for a few months. So they're kind of the disciplines of trading. But I touched on Forex, and Forex is the harder one of them all. Because if it's gold and you have a price of £10, then that's your baseline, a tenner. If it moves up to 11, you've made £1. If it moved down, you've lost £1. And that's about as simple as it gets, you know, because it's a movement. With Forex, you're pitting one currency against another, so you're actually looking at 2 platforms. So let me just rub this off and I'll kind of explain what Forex is. Okay. Now there's many Forex pairs. There's roughly about 28 that are traded, or the most popular I should say, because there is more than that, because you go into your exotics and things like that. But exotics are, let's just call them hard work. But if you look at the majors, which is about 8 majors, then you have the minors, and then there's the major minor crosses. Okay, but this is something you'll get more and more into as time goes on. At the moment, the biggest currency pair is euro dollar. All right, and the way they are wrote is like this. Okay, so the first part, this bit here, that is called the base currency. And you're trying to figure out whether that is going to go up in value or down in value. All right, against the secondary currency. So that's the second currency. So the theory is this. If the euro is stronger than the dollar, it will go up in value. All right, so that currency pair will rise. If it is weaker than the dollar, it will go down. And then with trading comes a lot of terminology, because the market going up is called long and the market going down is called short. Don't ask me why, I really don't know. There'll be some fable somewhere that possibly somebody could drop in the comments. But when you're talking to somebody who's not a trader and you say, yeah, I went long euro dollar, Joe Blogs in the street probably hasn't got a clue what you're talking about. And certainly if you turn around and say, yeah, well, you might have went long, but I shorted it. You know, it's a strange thing, up and down. But there's a bit more to it, because that could be called a bull market if it is on a run. Okay, and this one can be called a bear market because it's going down. Now, I did hear a little sort of story about where that came from, and it came from the fighting pits of long, long ago, when they used to bet on sort of animals fighting each other, and they used to put a bear and a bull in the ring. Now, a bear will stand on its hind legs and slam down, whereas a bull will dip its head and gorge up. So the bull will gorge up, the bear will slam down, and people used to bet on that contest. And that's kind of the story that was given to me as to where the bulls and bears came from, because I'm like, what on earth has that got to do with a financial instrument? And it's simply that. Maybe it's an urban legend, who knows? But that's what Forex trading is. And then it goes further into it, because you are sort of looking for a pip movement. Now, I wouldn't get too concerned about these sort of things. You're only interested in it moving up, moving down. Okay? And you'll hear terms like pip, tick, point. It's just movement. It's movement of price. If it went up 10 pips and you were on £1 a pip, you made £10. If it went up 10 ticks and you were on £1 a tick, you made £10. Some people call pips ticks. I often call it ticks because that's the way I was spoken to. I have two platforms that are currently on my screens. One works it out in what's called points. The other one works it out in what's called pips. But the actual movement is the same. So don't get too hung about it. You really don't. And then you have what's called the spread. All right, and this is kind of the final part of today. Because you'll be giving a price, and I'll make this very easy. Say you were given a price of 1 for that, and that was 1 spot 10. In other words, 10p more. What it means is the difference is 0.10. 0.10 is the spread, and that's how brokers get paid, or how many brokers get paid if you're spread betting. In other words, the price between the two instruments. So if you're moving up, it's got to move 0.10 before you start getting any money. But if it's going against you, you will be 0.10 against you before you start. So you're actually at a loss at the point of entry into the market. All right? But more on that in another video. So in a nutshell, that's what trading is. Just to recap, it is the movement of a product going up or down, and you profiting on getting that direction correct. and then you go into trading the charts. Trading the charts done by technical analysis or fundamental, and we'll go more and more into that as time goes on. So very broad stroke, just give you something to think about and to ask some questions in the comments below, because I'm genuinely interested in what you have to say. Okay, so as always guys, trade well, keep your risk managed, but above all, do what you love and the money will follow. See you all in the next one.